Alrighty, good morning guys. It is the 3rd of November, the day after Fed. The day after JP and the boys came out and bitch smacked the market. So, nasty stuff, right? Really no way around it. Tesla was down 5.5%. I think Amazon was down 4%. You had Google and Apple down almost 4%. QQQ down 3.5%. The S&P's down 2.5%. Some pretty nasty stuff, guys. So, the question that we have to answer today, tomorrow, and it may be into next week, depending on how today goes, is really whether or not the rally is over. And did yesterday's flush, did JP and the boys kill all the progress the bulls have made here over the last few days? Or really over the last week and a half. So we'll jump in, guys, and that is the mission for today and tomorrow. Try to answer that question. So the first big problem here, and it's been a problem all year, but you've got the dirty dollar back above the 21 EMA, back above the 50, and we're still here in that daily squeeze. So where this is an issue, guys, strength in the dollar, no bueno for the market. So daily squeeze, in an uptrend, back above your 2 moving averages. For now, the probability suggests that squeeze should go on to fire in the direction of trend. So if the dollar fires long here, and you take out 115, we should expect to see the market trade much, much lower. Now, in the event they can actually take the dollar down, take out the 21, take out the 50, take out the recent low, and then actually get that daily squeeze to fire short, then potentially, you might have room here down to the daily 200, but more importantly, the point being, if the dollar fires that daily squeeze short, in the short term, that's great for the market. So as far as the level here today, guys, and I do think we're going to open well above it, the hourly 200. So I'll put the hourly chart over here. But as far as comparisons to the current market in August, one comparison here is at least at yesterday's close, the dollar is trading under the hourly 200 for the first time since August. If the dollar is trending above the hourly 200, really tough for the market to trade higher. So I do believe this morning, yeah, we're going to open up around 112.80. Yeah, so we are going to open up back above the hourly 200. And that's not good for the bulls. So there's a lot of daylight ahead. We got today, we got tomorrow. Maybe the dollar breaks back underneath it. But as far as the over-under game, taking into consideration the daily trend and that daily squeeze, if they begin to rebuild the hourly here, big problem for the bulls. So heading into the weekend, got to see what's up here with the dollar. Over or under the hourly 21. Now, as far as the market itself here, guys, it's going to be the same key level here today. Hourly 200. So as of right now, as of yesterday's close, you've got the SPX above the hourly 200 for the first time since, you guessed it, the August rally. So if we break that level today, and we go into the weekend under the hourly 200, at that point, the bulls have pretty much officially given back all the progress they made here over the last week and a half. The bulls cannot afford to see the S&Ps closing under the hourly 200. And HYG, same exact thing. Holding above the hourly 200 for the first time since August. But from here, if they break that level, well then very much like the S&Ps, HYG at that point will have officially given back all the progress. So they got a fight here today, guys. If you look at the futures, and we are going to get the jobless claims here in about 10 minutes or so, S&P futures down about 1%. The slippage continues. QQQ down 1%. The small cap futures down about 1%. And the Dowski, the Dow down about 0.5%. So we'll see what's up here with jobless claims today. But that is kind of how I'm seeing it, guys. We're kind of at a line in the sand here this morning. If we go into Friday's close, under the hourly 200 on the SPX and HYG, and above the hourly 200 on the dollar, a little bit tough to think we can actually trend higher here in the short term. Now, for what it's worth, if you look at the daily chart, we're kind of hanging out here near that daily 21 EMA. So between now and Friday's close, if the S&Ps grind and close back above that daily 21, well, really at that point, the daily squeeze looks just fine. Positive histogram, price action above that daily 21. It's all pretty solid. That's not, it's not a structure that necessarily suggests the market's going to roll over here. So we'll see if they can rip it up there a bit into Friday. But one more chart here for you guys. If we take a quick look at the put-call ratio, I mean, here's how I'm looking at things. Like SPX, for example. And I'm kind of looking at everything the same way. The 5-minute chart got crushed. The 15-minute chart got slammed. So that loses all structure and trend. The 30-minute chart took a pretty big hit there. And on the hourly, you got that negative cross, and we'll have to see if we can actually hold at the 200 here this morning. But the point being, guys, the way I'm seeing it from here, it's kind of, how do I word it? It feels a little bit potentially like short squeeze or die. If yesterday's selling pressure continues under the hourly 200, then structurally all hope is kind of lost here for the bulls. So I do think the only shot they got here, potentially, is that yesterday you get that big flush into the close, you get everyone panicking a little bit, getting out of their long positions and buying a bunch of puts. Looking at the put-call ratio here, you did get a decent spike yesterday towards 1. And generally, guys, around 1 to 110, typically a sign that people are starting to lean into the short side. When people get a little bit too hot and heavy to the short side, that's when there is the potential for some kind of short squeeze. So the key for today is that they're going to trigger a short squeeze. They have to get the market above the hourly 200, but then all the lower time frames have to rebuild. What I mean by rebuild is something like that. Whoop, come on back. That was a good example. Oh, come on. Whoop, there we go. That's what I mean by rebuild. So hold the hourly 200, and then on your 5-minute, your 15, your 30-minute, you want to see this process begin. Price action gets back above the 21 EMA and the 50 SMA. The 21 EMA crosses positively above the 50. Then it all begins to behave like trend, where you're making a series of higher highs and higher lows. Hold the hourly 200, get your 5-minute and 15 and 30-minute doing a little bit of that. And they got a shot here, guys. Otherwise, things are looking pretty heavy here. So a quick video here before the open. 6 minutes out from the jobless claims. But as always, guys, I hope you found this helpful. And I will talk to you, let me see. I'll be talking to you on Sunday on the weekly watch list video. So until then, trade safe, manage your risk, be good boys and girls, and I'll talk to you guys soon. Adios.